The Goods and Services Tax, often shortened to GST, represents a significant reform in India's taxation system. It is a comprehensive, multi-stage and destination-based tax levied on the value addition at each stage of the supply chain. Prior to GST, India had a complex system of indirect taxes levied by both the central and state governments. This often led to a cascading effect of taxes, where taxes were levied on taxes, increasing the overall tax burden on businesses and consumers. GST aimed to address these challenges by subsuming a plethora of indirect taxes into a single, unified tax system. This simplified tax structure aimed to create a more transparent, efficient, and business-friendly environment. By unifying the Indian market under one tax regime, GST aimed to eliminate the cascading effect of taxes and promote ease of doing business. The implementation of GST was a landmark moment in India's economic history. It signified a shift towards a more unified and integrated national market. The tax is levied on the supply of goods and services, right from the manufacturer to the final consumer. This essay will delve into the intricacies of GST, exploring its key features, benefits, and impact on the Indian economy. The journey towards implementing GST in India was a long and arduous one, spanning over a decade and involving extensive deliberations and consultations. The idea of a unified tax system was first proposed in 1986 by the Finance Commission. However, it was only in 2000 that a committee was set up to design a comprehensive GST model for India. After years of discussions and negotiations between the central government and the states, the Constitution, 101st Amendment Act, 2016 paved the way for the introduction of GST. This historic reform finally saw the light of day on the 1st of July 2017, marking a paradigm shift in India's indirect tax regime. The implementation of GST was not without its challenges. There were initial concerns about its impact on inflation, compliance burdens, and potential disruptions to businesses. To address these concerns, the government introduced various measures, including a phased rollout, anti-profiteering provisions, and extensive outreach programs to educate businesses and consumers about the new tax system. The government also established the GST Council, a constitutional body comprising representatives from both the central and state governments, to oversee the implementation and administration of GST. This collaborative approach, involving both the centre and the states, was crucial in ensuring the smooth rollout and subsequent adoption of GST across the country. At the heart of the GST regime lie three key features that set it apart: its multi-stage nature, its destination-based taxation, and its dual structure. Understanding these features is crucial to grasping the transformative impact of GST on India's taxation landscape. Firstly, GST is a multi-stage tax, levied at every stage of the supply chain, from manufacturing to retail. This means that tax is collected on the value added at each stage, ensuring that there is no cascading effect of taxes. Unlike the previous system where taxes were levied on the entire value of the product at each stage, GST ensures that tax is paid only on the value added. Secondly, GST is a destination-based tax, meaning that the tax revenue is collected by the state where the goods or services are consumed, not where they are produced. This is a departure from the previous system where the origin state of the goods collected the majority of the tax revenue. This shift towards destination-based taxation ensures a more equitable distribution of tax revenue among the states. Finally, GST in India follows a dual structure, with both the central government and the state governments levying their respective GST components. The central government levies central GST, CGST, and integrated GST, IGST, on interstate supplies, while the state governments levy state GST, SGST, on intrastate supplies. This dual structure ensures that both the centre and the states have a stake in the GST revenue. The implementation of GST has ushered in a new era of economic reform in India, bringing with it a plethora of benefits for businesses, consumers, and the economy as a whole. By unifying the Indian market under one tax regime, GST has streamlined the tax structure, reduced compliance burdens, and fostered economic growth. One of the primary benefits of GST is the elimination of the cascading effect of taxes. This has resulted in a reduction in the overall tax burden on businesses, making Indian goods and services more competitive in both domestic and international markets. Consumers have also benefited from lower prices due to the elimination of cascading taxes. GST has also significantly simplified tax compliance for businesses. The previous system, with its myriad indirect taxes, each with its own set of rules and regulations, was complex and cumbersome. GST has replaced this with a single unified tax system, making it easier for businesses to comply with tax laws. Furthermore, GST has created a level playing field for businesses across the country. By unifying the tax structure and eliminating the tax arbitrage that existed between states, GST has fostered a more competitive and efficient market. This has encouraged formalization of the economy, as businesses are now incentivized to operate within the ambit of the formal sector. In conclusion, GST has had a transformative impact on the Indian economy. By simplifying taxation, reducing compliance burdens, and promoting a unified market, GST has created a more conducive environment for businesses to thrive and for the economy to grow. While there have been challenges in its implementation, the long-term benefits of GST far outweigh the initial teething problems.